Hi, this is Adam Khoo here, and in this video I'll be talking about the most powerful indicator used in Forex trading. A very common question I get asked is, Adam, what's the best indicator to use? Is it MACD? Is it RSI? Is it stochastics? Is it Bollinger Bands? And the list continues. There are over 300 indicators. Now, before you even ask about what indicator to use, you have to first understand how to trade based on price action and price structure. That's the first thing to understand before even talking about indicators. Now, if you ask most professional traders, they'll tell you that there are only 3 times you could enter a trade, or the best 3 ways to enter a trade. You either trade retracements on a trend, you trade breakouts, or you trade reversals. Okay, so let me just review this concept first with you so you understand the basics, right? So the first way you can take a trade is to trade trend retracements, which means you follow the trend. Remember that when you look at currency pairs, there are times they move in a very strong trend, either on an uptrend or on a downtrend. And you always want to follow the trend. You want to buy on the uptrend, you want to sell the currency on a downtrend. Now on a trend, the best time to enter is during a retracement or a correction of the trend. So let me kind of draw it out for you. Okay. Now, first of all, how do you identify an uptrend? An uptrend is defined as a series of higher highs and higher lows. So on an uptrend, prices go up and down, right? They go up and down. But every time the price goes down, guess what? That's right. You'll make a higher high than the previous high. Every time the price goes down, you'll make an even higher high than the previous high. Every time it goes down, makes an even higher high than the previous high. And this pattern continues until the trend changes, right? And every time the price goes down, you'll make a low higher than the previous low. Price goes down, makes a higher low than the previous low. So it makes a series of, again, higher highs and higher lows. So that's the first thing to recognize when it's trending up. So over here you can see higher highs and higher lows. So on an uptrend, you always want to enter during a retracement, when it's making a temporary dip or correction on the trend. I always say that it mirrors our breathing patterns, okay? So think about this as breathing out. You breathe out. Now you can't breathe out forever, okay? You gotta breathe in before breathing out again, breathe in and breathe out. So you always want to enter on the breathing in, or rather, you want to enter after it has breathed in, just as it's breathing out. So breathes in. Now, the moment it starts to breathe out, that's when you want to buy the currency pair. Breathes out and exit over there, and that's what we call a quick swing trade. And then you repeat that process, right? So over here you can see, again, those are the higher highs and those are the higher lows. And we can use, a moving average or a trend line to, or rather, moving average or trend line as a level of support to know when to enter the trade. So every time it breathes in, right, the moment it hits a level of support, like a moving average or a trend line, and you see some kind of bullish candlestick pattern, right? So you have to combine candlesticks with trends with moving averages. So you see a bullish engulfing, you see a pin bar, boom, you get in and buy, and you enter the trade and you take profit, wherever you want to take profit. As long as you're risking 1 to make more than 1, you are profitable, right? So that's a trend retracement on an uptrend. On a downtrend is the opposite, right? On a downtrend, how's the breathing pattern? Breathes out, breathes in, breathes out, and the trend continues down. So on a downtrend, it makes lower highs and lower lows. Okay, and again, on a downtrend, you always want to sell or short the currency pair. You always follow the trend. So when's the best time to sell? During a temporary retracement or breathing in. So wait for the breathing in, breathe in, all right? And as it's breathing out, that's when you sell. You sell, it goes down, you take your profit and you capture those pips over there. So again, you want to use a moving average or trend line resistance to know when to enter, right? So breathes out, breathes in, hits a level of resistance on the moving average or trend line, you see some kind of bearish candlestick pattern like a bearish pin bar, bearish engulfing, boom, enter the trade, goes down, and you take your profit somewhere here before the next retracement. Pretty simple, right? So any professional trader will tell you that that's what they do when they trade trends. Well, let's take a look at the charts over here. Here's an example. New Zealand dollar on a very strong uptrend. Again, you can see the series of higher highs, right? Making higher highs and making higher lows, right? Higher lows and all that, right? So again, you enter when it dips, when it breathes in, finds support at the moving average. So this would have been a very good entry, breathes in, right? And finds support, and that's a candlestick pattern. That's a bullish engulfing pattern. So you could enter right after the bullish engulfing to capture the trade all the way up there. You could have also entered on this, which is a bullish pin bar, right? Entered it here as well. These are all times you could have entered. Yeah. So you can see for this currency is finding support at the 18 EMA. Different currencies have different characteristics at different times. Sometimes the currency likes to find support at the 18 EMA, sometimes the 50 moving average. So that's what I teach my students, to know which moving average is acting as a strong support at any moment in time. Here's an example on dollar yen, and it's finding support at, you can see the 50 moving average being tested many times. So again, breathe in, or rather breathe out, all right, breathe in, all right, and find support. And again, that's a bullish pin bar. Again, although it's red in color, it's still a bullish pin bar because of the long lower shadow. That's a reversal pattern. Boom, you can enter buy there, put a stop loss somewhere there, and take the trade all the way up. This could also be an entry, right? Breathe out, breathe in. You've got that bullish engulfing pattern over there. Enter right after the bullish engulfing. Boom, go up and take your profit somewhere there. So this is basic stuff, right? You know, any professional trader will tell you this is basic 101 stuff. This is how you trade. You trade trends. You trade retracement of trends. So here's an example on a downtrend. So you can see on a downtrend, clearly making lower highs and lower lows. And for this example, you can see that the 18 moving average, again, acting as very strong resistance, right? Resistance at the blue line, very strong resistance, very strong resistance. And again, over here, you can see breathe out, breathe in, forms a bearish engulfing pattern. That's a reversal pattern. You could have taken a trade right there, sell, put a stop loss right above there, and very nice trade, risking 1 to make 2 or more. Retraces again hits the moving average, the 18, forms a bearish pin bar candle with a long upper shadow, a sell, and continues there. All right, basic stuff. And again, that's one way to trade the trend retracements. Another way professional traders trade would be to trade breakouts, right? So the price is a consolidation, moving sideways, making same highs, making same highs, making same highs, consolidating, and then it breaks the consolidation and we enter on the breakout to capture the new uptrend. Or reversal would be finding support, finding support, finding support, strong support over here, breaks the support, and we take a short to capture the trend all the way down. So here's what it looks like on the charts, right? So this on dollar yen, you can see it had a very strong level of resistance. It was consolidating. Eventually, it broke out of the resistance with a very strong bullish candle, right? So you could have waited for a slight retracement, and then we've got a bullish engulfing pattern that confirms the trend direction. So we enter there, a buy, could have placed a stop loss somewhere there and capture the trend as it went up. This is a short example. Again, consolidating, finding support, multiple support, tested many times, breaks the support of a very strong bearish candle, could have taken a trade, sell, put a stop loss somewhere over there, right? This could be your stop loss distance, whatever, we call this 1R, your risk, which could be, 20, 30, 10 pips, doesn't matter, and then all the way down. So this is very basic stuff, right? This is what every professional trader will tell you. You read any trading books, any trading videos, they'll tell you. That's it, right? Trade the retracement on the trend or trade the breakouts. But I've got news for you. It is not that simple. Right? If it's that simple, everyone who takes a trading course or watches a video will be profitable in the markets. And most people are not. Why? Because a lot of amateurs, they find that I identify a trend, it retraces to a support, I see a candlestick pattern, I enter, what happens? The trend changes and it gets stopped out. Or they see it in a consolidation and it breaks out of the consolidation of a strong candlestick pattern, they enter long, and again it reverses, they get stopped out. It's really frustrating and you're wondering, what am I missing? What's wrong, right? So let me show you visually how that happens. So again, they may see that pattern of, again, higher highs and higher lows. This is an uptrend, right? Retracing down, there's a strong support level there, there's a bullish candlestick pattern, I buy. What happens the moment they buy? Boom! It breaks the trend, changes the trend, they get stopped out. And again, it's in a consolidation and you're watching it, strong resistance over there, it finally breaks the resistance, it's strong, a bullish candlestick pattern, and they enter long and it reverses back and they get stopped out. So why does this happen? The reason is very simple. It's not good enough to look at trends or support levels or candlestick patterns. What's very important is you must take a look at the strength of the currency at that moment in time. Because even if a currency is on an uptrend, even if it breaks off a consolidation, but if it is not a strong currency relative to other currencies, you find that the moment you enter, it will reverse easily. So how do we identify the strength of a currency compared to other currencies? Well, my secret weapon, and one of the most powerful indicators used by professional bank traders, is the currency strength meter. With the currency strength meter, we can tell how strong each currency is. And we always buy the strongest currencies and at the same time sell the weakest currencies. And that's what gives us the strongest edge and win rates in the market. Let me show you how it works right now. Alright, so this is the currency strength meter. And as I said before, in order to have the highest probability of the price moving in your direction, you always want to be buying the strongest currencies and at the same time selling the weakest currencies. So how do you measure the strength of the currencies? Well, pretty simple. Take a look over here. Look at all these numbers in the table, right? Now, whenever a currency has a value of 60 and above, it's a strong currency. So these are the ones coded in green. There you go. All right. And if a currency has a value of below 40, it's a weak currency and it's coded in red. So notice the ones in red are all below 40. And the ones in yellow are not strong, they're not weak, they're neutral. So those are the ones we want to avoid. We only want to buy the green ones and sell the red ones. Okay. Now, of course, you can see that some currencies are strong and weak on different time frames. So it depends on which time frame you're trading at. There's no perfect time frame. Different traders like to trade on different time frames. I like to trade on the 15-minute, 1 hour, and 4 hour time frame most of the time. Okay, so this is how it works basically. Now you can see from the table right here. Now, if we look at the 4 hour time frame, we can see what are the strong currencies. The dollar is green. Right, so it's strong, the euro is strong, the franc is strong, and the yen is strong on the H4 time frame. Now, what's weak? What's weak would be the pound, right, the Aussie, and the New Zealand dollar. So how do I know which pairs to look at to look for the trend retracement or the breakouts? I always match a green with a red. Okay, so what could I match? Now you can see that euro is really strong. Euro is green across all time frames. So I definitely want to be looking at the euro right now, right? So euro is strong. And what's really weak? What's really weak is the New Zealand, right? So euro, New Zealand. This is all green, that's all red. I love that, right? So euro, New Zealand. So obviously, I like to be buying the euro because it's the green, and selling the New Zealand, which is red. So looking at the Euro-New Zealand pair. So if I go and look at the Euro-New Zealand pair, all right, so I'm at the Euro-New Zealand pair, and sure enough, you can see Euro-New Zealand. Now, notice I was looking at it from the H4 time frame, but I always take a trade on the lower time frame. In this case, I'm looking at the H1 time frame. And again, you can see on the H1 time frame, Euro-New Zealand is on a pretty clear uptrend with the moving averages sloping upwards in sequence, all right? And it's making higher highs and higher lows. And so what am I waiting for? That's right, I'm waiting for it to retrace down, right? So you can see that the 50 seems to be a strong level of support over here. So it retraces down. If it hits the 50 moving average as a support level, I've got a bullish candlestick pattern, right? That will give me more confluence in action. I could then look at taking the trade, entering here, and then taking the trade to take profit somewhere there. So again, I'll be looking at this pair right now because again, Euro is the strongest currencies, New Zealand is the weakest currencies. So what are other combinations that I would trade, that I would focus on for today, right? So Euro New Zealand, I could also look at, for example, the Aussie versus the franc, right? So again, Aussie is red, although so Aussie is really weak today, right? Franc is strong on most time frames except the 15-minute. That's fine, right? So I look at Aussie franc. So let's take a look at Aussie franc right now. Where's my Aussie franc? There we go. That's the Aussie franc. Okay, and again, Aussie is weak, so we want to sell the Aussie. Franc is green. We want to buy the franc. Okay, so sell Aussie, buy franc, which means we're going to short the Aussie franc pair. And sure enough, you can see the Aussie franc pair is in a very, very strong downtrend, and can see recently it was finding support and it broke the support over there and going all the way down. Like I said, whenever the currency strength is aligned to the trend continues all the way down very, very strongly, or continues up very, very strongly in the event of Euro New Zealand. Now, what you do not want to do is you do not ever want to trade two currencies that are strong or weak at the same time. For example, it'd be really stupid to trade the Euro yen, for example. Now, why won't you want to trade the Euro yen? Because Euro is green and franc is green. They are both strong currencies, right? So whether you buy the Euro yen or you short the Euro yen, it's not going to go clearly in one direction because two strong currencies are fighting against each other, right? At the same time, it'll also be very stupid to trade the pound Aussie or the pound New Zealand because they are both red currencies, so they are both weak currencies. So again, if you trade that pair, it's not going to go very clearly in one direction. They're both weak. So again, always buy the green and sell the reds, and do it when you see a retracement on the trend or breakout from the consolidation. When you combine this, it becomes a very, very powerful strategy to achieve high returns of profit and win rates in your trading. So here's a little peek into our Telegram chat group community. We've got over 700 traders who trade live every single day in this chat group where we mentor each other, we help each other to find trade setups, and you can see how powerful the currency strength meter is, or we call it the CSM meter, right? So these were some of the recent screenshots. This is from Norbert. I think Norbert's from Philippines, if I'm not wrong. He says 8 hour today. Now, in case you're wondering what is an R, okay, when you place a trade, you either risk 1%, risk 2%, or risk 3%, right? So that's what we call an R, which is the unit of risk. So if you're risking 1%, 8 hour means an 8% return on your capital. If you're risking 3%, 8 hour is a 24% return on your capital. So some of my students are risking 1%, some are risking 3%. But we measure our performance in terms of hours. How many hours did you achieve in a day or month, right? So Norbert said, I achieved 8 hours today focusing on BFS trades. That's not best friends forever. It's what we call bull flag setups, bull flag surfing, right? It's one of the strategies that I teach in the Forex trading course. And I'll teach you a bit about how that works in a short while. Just hang on there, right? On Aussie franc and New Zealand franc, thanks Adam for giving us the CSM indicator, currency strength meter. Helped me a lot to focus on pairs with the strongest trends. And this guy Aaron said CSM is a useful tool. Today I've won 4R, right? 4R in a single day. Agreed with CSM. My win rate for BFS, bull flag surfing, is 70 to 80% win rate. This guy Dale from the UK, Adam, I'm on a 9 bull flag surfing trade winning streak since using CSM. Strictly only taking the strongest currencies against the weakest. Very nice tool, right? So you can see that with this tool, a lot of my students are getting 70-80% win rate on their Forex trades, daily, right? This was the first trading day of the month, and my community of Forex traders are starting off with a bang, taking profit on pound franc in just 45 minutes. You can see we've got over 731 members. It's a trade I called out, and people thank each other for calling out trades. Thanks, Adam. Congrats. Thanks for the call. Thanks for the call. Thank you, TP. Thanks for the call. So TP is take profit. So we've got our own logo with the piranha, right? So whenever we take profit, we put that logo of the piranha. Yep, beautiful. Thanks for the call on Aussie franc. Bouncing off the 18 moving average. 1.5 take profit. Thank you. Total 3.5 our win today. Total 5.5 our win today, 5.4, 5.2, 6.7. So if you are making anywhere from 3 to 5% a day, that compounds in a month and a year. That's very, very good profits as a trader. All right. So I know a lot of them were talking about BFS. BFS, what the heck is BFS? BFS is one of the trading strategies that we use in our community, and it's called the bull flag surfing strategy, right? And as it implies, we look for currencies that are very strong against very weak currencies. So what are the entry rules? Okay, so the first thing is the currency strength must be aligned. In this case, we are trading the Aussie yen, so we want to make sure the Aussie is green and the yen is red, right? So we buy the Aussie, we sell the yen, which means we are going long the Aussie yen pair. Next, moving averages must be sloping up, right? They're sloping up, moving averages going up. Candles are surfing the EMA. What does that mean? So what that means is we are looking for, we are looking for a pattern where the price is surfing, bouncing off one of the moving averages. You can see it's surfing this moving at the 6 EMA, right? Surfing, right? And what we're looking for is after a strong impulsive wave, corrective candles are making lower highs, right? So in other words, after a strong breathing out, you want to see breathing in with lower highs, lower highs, lower highs, lower highs, lower highs, lower highs. It must keep making corrective candles, making lower highs. The moment it makes the first higher high, we place our buy order here at 84.09. We place our stop loss at 84.01, somewhere below this candle, with a risk of 8 pips in this case. And we place our profit target at 84.25, which is double our risk. So we're always risking 1R to make 2R, risking 8 pips to make 16 pips, or risking 30 pips to make 60 pips. Depends on the trade setup. So we enter the trade over here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 candles, we're taking profits. That's about 2.5 hours, right? So our exit rules are pretty simple. We either exit with a loss, losing 1R, or we exit with a profit, making 2R. And again, with the currency strength meter following the trend with the candlestick pattern, your win rates are really high, allowing you to achieve consistent profits over there. Now, if you're interested to join our Forex community, our private community, you like to get the currency strength meter, it all comes with the professional Forex trading course, which you can enroll for at piranhaprofits.com. So go ahead to piranhaprofits.com, find out more about how you can enroll and join us in this community to get the indicator, to get the trade setups, the trade alerts on a daily basis, and to complete your journey as a successful Forex trader. So may the markets be with you. I look forward to seeing you in the chat groups on the online video tutorials. Take care. See you soon. Hi, if you've enjoyed this video, do subscribe for more videos coming up soon, as well as visit us at piranhaprofits.com to find out more about our online professional trading courses.